Afternoon all, how are we all doing? Sorry, I'm in a bit of a scruffy mode today. I've been paddleboarding all morning, so just got back from paddleboarding. So I'm in my civvies. Hey, the life of a trader. Make $2 in the morning, go paddleboarding, come back for lunch to make some more money. All good. So how are we all doing? Afternoon, Peter, JC, Crum, Virginia, Paolo, Monkey, Steve, Jimmy, Jacob, Alex, David. Afternoon. Had a bit of news this afternoon. Building permits came out slightly negative. Doesn't happen. Make a lot of difference to the market, that one. We've just had the industrial production come out as well. A higher than expected figure. So it's kind of pluses and minuses, but no real massive impact on the US dollar, as you can see. It's not really done anything dramatic off that, which you wouldn't expect anyway. In the sea, yes, Steve, I do go paddleboarding in the sea, or rather on the sea. Not in the sea, on the sea. Because if you go in the sea, you get poo in your mouth. For those of you who don't live in the UK, we've got a bit of a sewage problem in some places down here, but it's okay. It's not too bad where I am, actually. Yeah. Is the reducing ADR on all pairs a normal trend in the summer due to sideways movement? Yes. In the sea, English Channel. Yes, it is brr today. It was brr today. Not that I actually went in. I only go up to my knees because I'm such a good paddleboarder. I don't fall in. And it's really flat today. So yeah, so that news came out. Nothing much there. There's no other news this afternoon. Next news is at 7 p.m., which is FOMC meeting minutes. Probably going to get a whipsaw for that. We've got oil inventories at 3:30 this afternoon. So might want to have a little look at oil. It's getting down to interesting levels, but what I'm hoping for this afternoon is a drop on oil down to ADR. I will be interested in getting in that if we can get a drop down. So we'll see how we go with that. Other news this morning, we had the CPI figure come out for the UK, which was 6.8. So that is slightly higher than anticipated by 0.1%, but it is a drop of 1.1%. So it's a big drop in CPI. Very, very good figure for the UK. Not good for the pound, obviously, because lower CPI figures mean less inflationary pressure. But the traders are factoring in a 6% max inflation interest rate. We're sitting at 5.25 at the moment. So that gives us either a 0.5 or a 0.75 over the next 2 months. So probably 0.25% and 0.5%. Which way round they do it, we'll wait and see. But we have got more interest rate rises coming to the tune of nearly 1% forecast. So there's a good chance that we will get another rally on the pound. Other than that, we had the GDP for the Eurozone as expected. We've had a few stock movements. US indices have moved a little bit today. Other than that, not a lot of other news. We had the Canadian housing starts and the US housing starts, as I said, but they don't do much. So yeah, so that's this morning's news. Yen weakness to 145.90 level. That triggered the September intervention. There we go. So that's the intervention I keep going on about. 145. So we're back up to that yen level where they might start popping a bit of yen strength in. So morning, John. Afternoon, Brian. Morning, afternoon, evening, good night, wherever you are. DAX this morning banked just under $1,000 this morning. Beautiful ORB today. Your pre-market 15 was there. Your 5-minute was there. It did nothing but break. So I got a 2R. We moved up to 3R. We looked at this morning. We saw this rejection, got out. on the second half. So 2K banked, hasn't gone anywhere since. So that was the level I said about this morning, that I would be worried about us not getting beyond. We butted straight into it and didn't go any further. So DAX is done. US indices, we've got 2 minutes to go. So a bit of a weird move on the US indices in the Globex session. So we opened up, went sideways. When the DAX opened, we had a little bit of a rally with the DAX, but they've tanked and actually closed below yesterday. Well, they are below yesterday's low across the board at the moment. So we've had quite a few stock earnings reports come out pre-market, which have tanked the indices. So if you look at these on Financial Juice, that one there, Target slashes full year forecast. We've had HKEX first half net profit released, Carver shares surging. So there's obviously been a few earnings come out. These are positives. I don't know why it's tanking, but there's been a few that have come out which have obviously tanked it a little bit. So yeah, there we go. So we'll watch the open and play the pre-market ranges. Pre-market ranges are very tight today, so you'll be a little dangerous taking these today because you've got a very strong chance of a whipsaw. So just be careful if you're trying to trade the pre-markets today. We might get a bit of a whippy one. So afternoon, Francisco, day trader FX, Themba. Okay, we've got 40 seconds to go. I've banked a fair bit of FX today, which I'll go through in a minute. Banked 0.8% today, banked 0.4 yesterday. I'll go through those in a sec. Right. Okay, 5 seconds. Okay, so I'm not taking any pre-markets. They're all too tight. But there's your pre-markets today. So you've broken long on all three so far. Doesn't appear to be a massive amount of volume today. So nice break on the Dow. So you pretty much got 1 R there so far. Not a lot today, is there? Okay, pulling back on the NASDAQ. Dow, nice, easy 2R there. Easy 2R this morning, this afternoon. So if you've taken the pre-market Dow, well done. You're out and done probably. Andrews, has been a slow day. It's actually been a pretty busy day today. Well, busy day movement-wise. Not a lot of direction, but we'll have a look at the FX market in a minute. But it's yeah, it's been a tricky one again. There you go. So you've whipsawed basically again on that pre-market range on the NASDAQ. So if you've taken the pre-market, you'll be either hedged or stopped out, double-ended stop out on that. Just long at the moment there and just long at the moment there. Just wait for these 5-minute candles to go in and then we will have a look at the breaks. So I'm going to trade the 5-minute ORBs. While we're waiting for those 5 minutes to go in, let's have a quick look at where we're potentially going. So obviously with the DAX, we've still got this gap fill in play on the DAX at the minute, which is here. So we were looking today for a rally at the DAX back up into this propulsion gap, which we didn't manage to get. So we basically broke up into that high that I identified as a potential resistance. We hit that. We tried a couple of times to get through it, couldn't. So we've basically just stayed stable all morning. So that, from the DAX perspective, is where we should be heading next. So if all the indices are going to rally along the same sorts of lines, we should be looking for longs on these today. But as you can see, it's a little bit of a different story with the US indices at the moment. So we're just coming down and testing this propulsion gap at the moment to see if there's any buyers down here. So from a downside perspective, it's pretty much ADR today on the Dow. There's nothing there in this propulsion gap to stop it. If we've got buyers, they'll be stepping in. If not, it's basically straight down to ADR today on the Dow. The S&P, we've pulled back into support and bounced. So from this one today, we're looking at last week's low from a downside perspective, which is miles inside ADR. Sorry, this chart hasn't updated. Come on. Okay. So from the S&P perspective, yeah, sorry, there's the low down there. So we've broken that low. Monthly low is next stop. We've broken that area there. So we'll be looking for a push back down into the monthly lows. Upside could go absolutely anywhere upside. We're obviously in a downtrend at the moment. So NASDAQ, we are down at the previous month's low. We've got that weekly low. So downside potential not far at all. So where we are now on the NASDAQ, you can see we've got these two levels coming up. So we're here. We've got that weekly low. This is the monthly low. So anywhere around here, we're probably going to get limit orders trigger, as we did on Monday. So we hit this Friday, bounced off of it, tried again Monday twice, failed. Tuesday, now we're back to Wednesday, looking like we're probably going to retest this level. So if we don't break that level today, I would expect all the indices to rally up. If we do break that level today on the NASDAQ, you're looking at coming all the way back down to this previous low, which is 150 ADR. So there's a long way to drop if we break this level. So we'll see what happens with that one today. But there's lots of room, obviously, in all directions. Huge move on the Dow. If you took that Dow one today, well done. I wasn't in it, but it was a bit too tight of a range for me. But you got 2.5, just shy of 3R out of that today on the pre-market. So that's too big, not trading that. So pre-market was too big, post-market far too large. Maximum range 786. That's 20% of average daily range. We've done 94 or 940. So we've done pretty much about 25 to 30% of the average daily range in that 1 5-minute candle. It's too far. So market's going to find it hard to get any momentum to give you a 1R return on that. So not going to take that one today. Max range is too tight again here on the S&P. Look, minimum range I'm interested in is trading a 10% range. That was less than 10%. So not taking anything on the S&P. NASDAQ going to take a break of the NAS. So just trading that one this afternoon. Tricky today. You looking at the Dow. God, that's a beauty. Look at that. Didn't trade that in futures today either. Stupid. Never mind. This is a prime example of, back testing. You're never going to trade everything in back testing that you see in back testing. I've already had a good morning on futures this morning on the Dow. So I'm not trading the Dow this afternoon. So if I had been trading the Dow this afternoon, I'd had an amazing afternoon. But I wasn't. So, in back testing, I would have missed all that profit. So back test results wouldn't have been as good as actual real life, would they? Works both ways. S&P break is to the upside. That's going for it as well. NASDAQ's just about to break long. Typical. The one that I'm going on today is the one that can't be bothered to move. Couldn't make it up, could you? Triggered long. Oh, come on. Look at it. Let me in. There we go. Triggered along. NASDAQ. I've missed the boat now. You watch. You watch this lot. All completely collapse. See where we go. One of those days today. Right. Okay, so we'll wait for this to play out, see where we go. S&P, if you took the pre-market S&P, well done. So the only pre-market that hasn't worked was that one. That worked beautifully today, and that one as well. So bear with me 1 second. Sorry, I'm back. Sorry, the doorbell just went. The wife's out with the dog. My eldest son is not in his room. And my youngest one's got his headphones on. So I have no idea if there's anybody in or if it's somebody that's locked out of the house. So just getting him to check the front door. Right. So, yeah. I can't remember what I was saying, but anyway. Beautiful breaks. But, you know, normal backtesting shows that these ranges aren't usually productive because you usually get whipsaws at these ranges. So the only one that whipsawed today was the one I didn't take there, obviously. But these would have been absolutely beauties, like 6, 7, 8 Rs. Or we can measure it. So your pre-market, it's not that much actually, is it? So we got nearly, yeah, so you got 3R on the S&P, 5R, so it's 8R basically on the S&P and the Dow today. If you took them. If you did, well done. When does school start? I know. 2 weeks. 2 more weeks. There was a really good comedian called Russell Kane in the UK. And he did a video basically 1 week into the school holidays. He released a video on YouTube saying, like, how many times so far have you sat at the stairs and cried? Yeah, 1 week in. It's like, when are they going back? Not long. Steve, took US 30 based on 4-hour trend line bounce. Good man. Trend lines, eh? Oof. Unagi. UJ reversing at last. Yeah, hopefully. We'll have a look at the FX pairs. So we'll see where these go. But if you've taken the pre-markets or the post or the 5-minute ORB today, that one you're done. That one you're done. The only one that I'm in, not moving anywhere. So there we go. We'll have a look at that in a minute. Right. Oops. FX. So ADRs today. We've had a few ADRs today. Aussie dollar, New Zealand dollar. Got out of that one today on the news. We hit ADR, bounced off beautifully. So that was a lovely ADR reversal. Bit tricky to get into this one today. We looked at this in the live room this morning. There's no reversal alert on this because, as you can see, the last push before the low was put in was right up there. So you didn't get a reversal alert on it this morning, but we slammed straight into ADR, came down and retested it. We looked at it down here this morning and I said it was this double top here. This is what I said. Take a break off. Yeah, we had this tweezer top put in here. Yeah, so this is where we were looking at it. I said, that's your W pan. When we break that, go long. And obviously we're up here. So that worked out beautifully, but there's no way of getting a reverse alert on it. So if you had the EA, you couldn't have triggered an alert on that today or a trade. So hard to get into these New Zealands because it was off the back of the news. Euro New Zealand, ADR hit. So I got out of the Euro New Zealand, today. Took that one off at ADR. Just as we got that reversal alert in, that played out beautifully. So lovely ADR reversal. There's ADR reversal alert triggered. Beautiful, straight up. Easy money today. Pound Swiss, ADR hit to the upside. So we were looking at this one. I said, watch this 150 level. So this is what we were looking at this morning, 150. So this is your monthly high. We got these 3 peaks here, which is a previous resistance, or rather support. Yeah, 3 times support, broke it, came up tested. So this whole area here is basically a support resistance zone, which is exactly where we are at the moment. So I was saying, watch this 150 level if we can get somewhere around there. So I entered this one today on the other account, short. Haven't gone anywhere yet. So I'm in short basically in a tiny bit of drawdown on it at the moment. But there's a good chance this will push up basically into these highs somewhere and we'll get some resistance, some limit orders triggering up there. So that's an ADR 100. You've already had a reversal alert on it this morning. You had one. Actually, this is the first reversal alert you've had. Yeah, this is the first reversal alert today. So that's your entry. So that's your first entry today. So working out so far straight off of 125 ADR. New Zealand dollar CAD. ADR hit to the upside. Again, this was off the news. There's your reversal alert. It's very, very tiny. You can only just about see it. So there's your M pattern reversal. So that was a stop hunt M. Straight down, out, back into propulsion. Done. So you missed that one. New Zealand dollar CAD, New Zealand dollar Swiss. So reversal alert on New Zealand dollar Swiss was there this morning, and the retest. There's your M pattern. That's ADR. Almost got to 125 ADR. That one's played out nicely as well. So from the reversal alert, you've got 21, which is half an ADR. So you've had a half an ADR drop. So again, that's played out. So 100% strike rate on these today. Aussie New Zealand's the only one you wouldn't have got into with a reverse alert, but the rest are all textbook, straight in, straight outs. And New Zealand dollar, US dollar. Again, reversal alert was there. Yeah, ADR. So he's hit straight into ADR. Reversal, retest, M pattern, down. You've had more than half an ADR out of that. 36, half an ADR is 30. So again, just over half an ADR. All played out beautifully today. So all the ADRs, very, very good. I said to watch these today. We haven't had any trigger. So I was looking to see if anything would push up so we can get midweek reversals going, but there's nothing there. So no weeklies. RSIs. We got one to look at, which is the pound Swiss. So just extended over the 70 level. We hit this propulsion gap. We filled the propulsion gap, done 125 ADR. We got tweezer tops gone in and the reversal alert has triggered. So this looks like a potential good short. We have had good news off the pound today. So I'd be watching this one, as I said, this 150 level. So this is an RSI extension. It's an ADR hit. It's a range. We're up at range highs. We've got propulsion gap targets to the downside. It's all setting up beautifully, but that is where I would love to take it. If we could get up to 150 ADR today, might do it on the news on FOMC. May not, we'll see. But if we can get a push up to there, good looking short opportunity on that, back down into the lows of this range. So that's your only RSI hit. That's also hit on the 14, obviously. There's a couple of other 14 RSIs, but I'm not going to bother going through the 14 RSIs. The 21s are giving plenty of opportunities at the moment to get into trades. So I'm still trading the 21 RSI. So I haven't needed to change this summer because there's been plenty of opportunity. But so everything I've banked, I'll go through those. I think I've already gone through them, really, but let me just quickly check what's going on with the indices. So we're still pushing on NAS. It's Dow. Look at this Dow today. Oh, talk about the day I should have traded futures. I don't even want to think about how much money that would have been. That would have been 5 contracts, 5 contracts, probably 5 grand on that break. Without looking back. Should have taken that today. Had a good morning though, so didn't want to jeopardize the winnings from this morning. But anyway, never mind. So basically, trades got out of so far. The pound US dollar, one position taken off on that one. So I'm in this from, God, where am I in this from? First entry's there, look. So that was on the H1, M5, mean reversion. We went sideways for a week, dropped a little, dropped sideways for 2 weeks, which is where we are now. So I've had lots of opportunity to escape trades here. So that one there I've taken off this morning. The trade has been put back on by the EA. So remember I said this morning, if you're in here, I want to get out of these trades basically. And if the market drops back down and gives us another reversal, I'll add them back on. So basically taking it off of profit, added it back on again. Yeah. So just going to keep getting in and out and in and out as long as this thing decides to stay in a range. So that's happened again this morning. Reversal alert there on M5. Where is that entry? I can't even see where the entry is. Oh, it's just happened. I've got this set up differently on the EA. This is my reversal alert indicator is set up different to the EA. I've got it on aggressive mode. So yeah, alert's just triggered there on a long. So that's in. That's a point. Didn't cover that, Steve, this morning. You asked me to look at the settings. I've got aggressive mode turned on as well. That's the other difference. I've got aggressive mode turned on the EA on the VPS. This is the normal mode. Not that it makes much difference. You would still get an alert on it. So yeah, tick that off. Euro New Zealand, I've just shown that one. So that is an exit again there. So I've taken that one off there. And we'll be adding that back again. So average is 150, just looking for literally a day down. Just want a down day, basically. We'll be out of that. New Zealand dollar CAD. Took that one off this morning. That was an H1 M5 mean reversion entry from Monday. Straight in, straight out Wednesday. Hit that propulsion gap. Target done. It's pulled down. So perfect exit on that because that was at ADR. Again, beautiful use of ADR, yeah? Don't just use ADR as an entry. Use ADR as an exit. The reason I got out of that was because we hit ADR. Look what happened. Yeah, we hit our average daily range. Now it pulls back. So I'm out. Done. First time we did it for a while. So so that one I am out of. Aussie dollar, New Zealand dollar. Straight in, H1 M5 mean reversion entry. Exit today. Hit ADR. Out. Done. Euro odd. That's a drawdown control this morning. So drawdown control on that position. So that's the first entry. Did a DD control last week. This was the second entry. Just done a DD control on that one today. Third entry is on there, which was taken on Monday. Average is 125 ADR. Again, just want a down day. One down day. That's all I'm asking for. Aussie US. DD control done on this one yesterday as well. So again, similar thing. First entry, second entry, third entry is there. I've taken one off already on this, put it back on again. Yeah, so there was a profit take on this one yesterday, which was that entry there. So I took that one off yesterday. We've pushed back down, so that trade's been added on again. There it is there. So yeah, just going to keep getting in and out. As long as this thing's being range bound, I'm just going to get in and out, and just keep taking it off until we get that pullback and that push. So that's basically what I've been closing over the last couple of days. So 1.1, 1.2% banked over the last couple of days, just needing to bank stuff because obviously we aren't going anywhere. 1R just about on the NASDAQ. NASDAQ's going to be the one today, isn't it? The NASDAQ is going to be the only thing today that doesn't make money, just because it's the one thing that I'm taking today. You watch. Let me just catch up on the chat, then I'll just go through the positions that I've got on. If you want to look at analysis on all FX pairs, that was done this morning. So I went through every pair from top to bottom this morning. So if you want to have a look at any analysis, go and watch this morning's replay. I go through it from top to bottom. So if you just scroll through the replay and we're on Euro Odd and you want to look at Pound CAD, you got to scroll forward. If you want to look at Aussie New Zealand and you see Euro Odd, you got to scroll back. Yeah. So I just went through everything from top to bottom today in this morning's live room. So I'm not going to do it again because it's the same stuff basically. So there's no RSIs, ADRs we've already looked at. So I will go through the positions that I've got on at the moment though. So let me just catch up on the chat. UJ, yeah. So UJ, basically we're up at this 145 level. So that was what was in the news this morning. Yen weakens to 145.90 level that triggered this September intervention. So if we go back in time to September there, yeah. So this was the first intervention. So we talked about this morning, and I talk about it all the time because it's very important with the yen. You understand how they work. So this was the very first intervention, 145. So the Japanese, as the yen was being weakened quickly, we had week after week after week of yen weakness. They started to say, if you do not stop, we will stop you, basically. And then you got that intervention. So this is basically the Japanese buying a ton of yen and powering the yen up dramatically to drive everybody that's longing it out of their positions. Yeah. The intention is that the market then flips and goes the other way. Yeah. So that move there was 573 pips. ADR on this is 112. So that was basically a 6 ADR move down, 600% ADR. Yeah. So our ADR indicator that goes to 100%. Maximum it goes to is 225. 1% of the year we get beyond that. This went 600%. Yeah. Then the market said, nah, screw it, we'll have another go at them. They hit the 145, got battered away. They hit it again, and then they popped through and rallied for 2 weeks. As that happened, the Japanese said, if you carry on doing this, we're going to hit you again at 150, which they did. Bang, another big intervention. Yeah, so that one there was 585. So again, roughly 5 to 6 ADR, 6 times ADR. Yeah, straight down. Then the market listened and they hit them again just to make sure. Yeah, and since that happened, yen screamed down. So where we are now is back up that first intervention level, 145. You see, we hit the 145. Yeah, and this time the market went, yeah, we're not doing that again. Everybody piled out of their positions. Markets rallied back up. We've exceeded it again. Yeah, so any time now that Japanese intervention could come. Yeah, 6 ADR. So let's measure it. So 1 ADR is 112. So that is 1 ADR roughly. Okay, so 1, 2, 3, 4, 5. Oops. 6. Yeah. So within 8 hours, within one session, that's the candle you'll be looking at. Yeah. So when you're in these yens at the minute, and we've got the Japanese saying things like they did yesterday, wherever it was. Where was it? There. FX moves should be stably reflecting the fundamentals. We should not, we are not targeting absolute FX levels when intervening. We are to respond appropriately to excessive moves. Rapid FX moves are undesirable. This is the talk you get before the drop. Yeah. every time, like clockwork. Yeah, so just bear that in mind if you're in any yen shorts at the moment. I've got a target here. Look how ridiculous my target is in comparison to the intervention moves we normally get. That wasn't an intervention. This was the market going, screw that, we're out. Yeah, because they got a shot across the bow. Yeah, they've just given us another shot across the bow yesterday. Right, so just watch all these yen pairs. It may not happen. They may talk the talk, which they quite often do, but not actually do anything about it. So if that is going to be the case, we're going to be looking at pushes up to 150. Yeah, so there, and this is exactly what happened last time. First intervention hit at 145. Market rallied back up to it, tapped it, went through it, and went toe over the edge. Are they going to shoot us? No. Brilliant. Run for it. They ran to 150 and then they got hit hard. So that is exactly the same situation as we're in now as we were back in September. Somewhere here, if it continues, it's going to get hit. So don't worry. I'm not worried about being short on anything against the yen. More exposure, the better. TPs, if it's going to be one of these, you can see the exact same position I had there. Look, I got out here and then it collapsed. And then I longed it back up again. But it's up to you what you want to do with them. The interventions, and this is not an intervention, this is just a normal market pullback on this leg. You know, that's a stupid target to have if we're going to get an intervention. But if we're not going to get an intervention, it might just do that. Yeah, we might get supported off the 24.72 as we normally do and rally up to 150, in which case I want to be out here because I want to be out with profit. So all these yens are tricky at the moment. It's, do you want to be really risky and go for the big play, or do you want to make sure you get out with a nice profit? Yeah, that is going to make your month. That is going to make a normal trade. So your decision is whatever you want it to be, obviously, but just be aware that that is potentially on the cards, and it happens like clockwork. So just in a position over there. Yeah, that's US dollar yen. Does latency affect the ORB EA? Yes, it does. I missed the move on the DAX because the EA got the pending buy in too late after price had already pushed too far. Yeah. Got the NAS and the S&P though. Yeah. So yeah, it does. If you're getting continuous latency issues with your broker, change broker. Yeah. If they are triggering your orders too late and you can't get them in, you've got to change broker. Nothing you can do. If you're on a demo account, ping to the server is irrelevant, Rain. Yeah. So your ping to the server doesn't make any difference. Yeah. My ping is 93 milliseconds. Yours is 250 milliseconds. Yeah. The ping to the server is irrelevant, right? I place my order, or the EA places my order in 93 milliseconds. My broker receives that order. My broker sits on it for 0.7 of a second, then sends a message back to MT4 to say, yeah, all right, we'll give him that one. And then your EA places the order. Yeah, that 1 second is the difference between this thing being here, and you having a limit order or a stop order. Yeah, it's your broker's response time is the important thing. If you want to call that latency, that's your latency. Your ping, your connection speed to the server doesn't make any difference. It does make a difference. Obviously, if you've got a crap connection to the server, obviously that is going to add to the time. But it's very rare that you'll experience a issue that means you can't get those orders on. I mean, I don't think we were looking at this, were we? But these orders were placed. So 1435 and 800 milliseconds, yeah? So these orders went into the market and were placed by the broker 8.8 of a second. So fast, very fast. But if you trade on someone like 8cap, yeah, 8 cap, you can have market execution that lasts 2 to 3 seconds. That's just not going to work. So you've got to be careful with your broker. Nothing you can do, just change, unfortunately. That was a perfect bat pattern. Sorry, I don't do harmonics. Show me 1,000 bat patterns that worked, and I'll show you 10,000 bat patterns that failed. You won't see the failed ones because they're not bat patterns. They're 3/4 of a bat. In that set file, aggressive mode, yeah. Dollar week this afternoon. It's not now. Pushing up a little bit. What you're going to find today, this session, more than likely, is whatever we've put in this morning in London, and basically whatever we put in this morning in London, basically, as you can see here, you're probably going to just do that because they're not going to want to put a ton of money in the market before the FOMC meeting minutes. Pound New Zealand monthly range exceeded. Just done a drawdown control on Pound New Zealand. So we're up at the highs. That's the end of that New Zealand dollar strength then. Yeah, I mean, it's with FOMC coming up, it's not an interest rate decision and there is no press conference. It's just the meeting minutes. But we are on tenterhooks at the moment to find out whether or not they're going to freeze those interest rates. So hopefully in those meeting minutes, we'll get some kind of forward guidance from the Fed as to whether they're going to raise interest rates or not. Again, if it comes out as they're not definitely going to raise interest rates, or it comes out that they're undecided, I suspect we'll get a drop in the US. But I don't think the FOMC is going to suddenly go bang. We're going to get, a 200 ADR move to the downside on the US. We'll probably get a whipsaw off of it. Wait for Powell to confirm, and then we'll get some downward movement on the US dollar. So I don't think necessarily this evening we're going to get too much. Be nice if we did, but I think we're more likely going to get a whipsaw. But just in case we do get something, the market is going to do that during the New York session, because there's no way it's going to want to put large positioning into the US or anything ahead of that report. We may even get a move ahead of that report if it gets leaked. So we'll see. But so there's your London low. Well, there's your Asian low and your London high. I'd be very surprised if we broke out of that area today until 7 o'clock. And then 7 o'clock, obviously, we can pop up and down and do ADRs. If we get back down to here, I'll be buying it. If we get up into these highs here, I'll be selling it. So any ADRs today on US pairs, I'd take them back the other way because it's probably a whipsaw. Unless there's something in that report that is fundamentally like, it looks like we're going to have to raise interest rates, or it looks like we definitely will not have to raise interest rates. In that case, then we may have a more definite move by the market. But that we will find out later. You went over the MREA settings this morning. Yeah. If you want the EA set file, it's in the Telegram group. If your alerts are not triggering, that's nothing to do with the set file. It's to do with the set file. It's doing exactly what it should do, not triggering because there's probably not a trade idea, a trade entry. Make sure you've watched the bootcamp, and make sure you've watched the EA about the EA. Watch the video about the EA, and make sure you've read the manual and understand what it's doing. So if it's not triggering and you're expecting it to trigger, that's a different thing. But if it's not triggering, it's because it hasn't met the market conditions. So watch these videos so you understand how it all works, and watch this one specifically which explains all the settings of the EA in detail. And everything's also covered in the manual. There's set files and things there as well. So check everything out. Hopefully we get a push on this NAS up to 2R. Tricky one today. Surprised that the odd isn't tanking after the Lionesses smacked the Matildas. Yep, we're through to the cup final. That'd be nice. We'll have those ashes back in the form of the World Cup. You look at CAD Swiss, yeah. Not in CAD Swiss. So CAD Swiss just range bound at the minute. Longs from the lows. Shorts from the highs. So ADR hits to the upside, short. ADR hits to the downside, long if you get one. But I mean, it's going nowhere, is it? Look. Whatever you do on this today, it's the same principle as the US dollar. Unlikely the Canadian dollar is going to rally outside of the daily range today until FOMC's out. However, at 3:30, we have got the oil inventories, and obviously the Canadians' main export is oil, so we might get a move start on the Canadian off the back of oil, but I doubt it will be very big today. Everything's just stuck at the minute. We'll go through all these in a sec. Euro yen, been short since Thursday. Yeah, me too. In one, sideways. Nothing you do. If you're in a trade and it's not going anywhere, you can either close it out in a loss or wait. This is trading. Boring as hell. I've noticed the MRE AA does not calculate the stop loss amount correctly for indices and metals. I don't know. It's not for indices or metals, but never tested, to be honest. So yeah, I mean, if it's calculating differently, you need to change your stops. That's what the back test is for. Yeah. So if you're expecting a stop loss of 30 and you got a stop loss of 300, what do you need to do? Reduce everything by 10. Missed the end drop last time. I'm anxiously waiting. Yeah. Ooh, hello. Yeah. So that yen drop. It may or may not happen. The other thing the Japanese are notorious for doing is saying a lot of stuff and not actually actioning anything. So you might find that intervention does not come. But if the intervention doesn't come, I would expect a move from the market to come anyway, because the longer they push, the bigger that pullback is going to be. Yeah. So this move that we had last month was a normal pullback. Yeah. So that's a 61.8 retracement on a second leg up, just a normal move. But it always happens fast. Yeah. This is absolutely typical of elastic band theory, where you get that strong push with no profit take. So we had a push, accumulation, push. They haven't exited any of their positions yet. They've just pushed, built a new position, and pushed. They needed a profit take. So the profit take happens twice as quick. Climb up the stairs, fall down the elevator shaft. Yeah. Because the profit take move is always exponentially faster than the build up, because people are seeing their P&Ls growing and growing and growing. And when they see their P&L drop for the first time, they expect that. When they don't get that and they see a second drop in their P&L, they exit. As they exit, they become a seller, which entices the sellers in, which means that the selling pressure moves twice as fast as the buying pressure. Just the way the market always works, yeah? You climb up the stairs, you fall down the elevator shaft. If you run up the stairs, you don't tend to fall down the elevator shaft. Flag. Exponential moves are followed by small moves. Gradual moves are followed by exponential moves. It's just the way the market works. It's all to do with profit taking, basically. Yeah. Think of your P&L. If you were watching your P&L, I haven't got anything in profit at the minute, but if you're watching your P&L, yeah, let's say this is a positive, and that is $641. And I've seen this over the last 3 days become 300, 450, 635. Yeah. And then I see it get up to 850. And then all of a sudden it drops down to 750, back up to 800. And then all of a sudden it drops down to 650 again. I'll be like, And then it drops down to 550. And I'm like, crap, I better get out. So I exit on that momentum. So there's already selling momentum coming. I'm seeing my P&L get smaller and smaller, which makes me exit, which adds pressure to the sell. And then anybody that's thinking of selling sees the sell move starting and they add pressure to the sell. And then the sell moves 3 times faster. It all just goes bang, twice as quick. When you see an intervention move, there's nothing you can do about that. This is what an intervention move is by the Japanese. It's to stop you getting out of your positions. Yeah, this is why they happen so fast and they're so big. 600% of the normal daily range done in 1 4-hour candle. You don't get a chance to react. It's actually normally done. You'll find there'll be a 1-hour candle, which is 200 to 300 ADR, followed by another one. Yeah, so you just don't get a chance to react. That's the whole point. They want to burn everybody. Teach you a lesson. But it'll come. It'll come at some point. But, this is the US poking the Japanese with a stick going, go on then. You don't know if they will or not. It's all down to what they need to do. It's all down to what the Japanese need to do. Can't tell when it's going to happen. Afternoon, AZ. So I'm just going to quickly run through the pairs that I've got on, the positions that I've got on at the moment. You'll probably be in something similar if you're trading H1M5 mean reversion. So Aussie dollar, US dollar. First entry was there. That was off the H1M5 mean reversion there. We got divergence. We got a pullback. I had a second entry on that. That exit there was, in hindsight, I should have taken it because it was beginning of August. And I was like, summer trading is going to start soon. We're going to get into ranges. So what did I not do? Take the profit off. So I had to get into a third position down here. And I'm just waiting for a pullback on this move. Basically, well, it's more likely this move. Just waiting for a decent kind of pullback on either that move there or that move there into propulsion, basically. So 150 ADR is not far away, hardly in any drawdown on it. It's 0.67 drawdown, so it's nothing to worry about at the minute. So yeah, just waiting for a push. Swiss yen. I'll tell you what I'm going to do. I'm just going to put my TPs on these down a little bit further. I'll give myself 150 ADR on that. So I get a little bit greedier on that one. Yeah. Again, we know what's going to happen with these yens at some point. It's whether or not it's going to go there first or whether this is going to start this week, next week. FOMC might be when they decide to actually weaken that US dollar, in which case then the yen will power up and everything will start to come down. But we'll see. So looking for entry on that one. That was the entry there, H1M5 mean reversion. Had to take a second entry on it 4 days later. We pushed down. It's in profit. Well, it's break even basically at the minute. So only 2 positions on. Euro odd. 2 drawdown controls done on that one so far. 2 profit takes as well. So I've had 2 full profit takes. Yeah, I've banked 0.75% on it. Taken 0.25% off. So I'm plus 0.5% on the position at the moment. Break even's 125 ADR away. I'm just looking for an ADR day, basically. Not going anywhere. Same as everything. It's either grinding like hideously slowly or it's just not going anywhere at all. So just waiting for an exit on that. Euro yen, same story as the Swiss yen. It's virtually the same trade. I've only got the one on it from Thursday last week. We haven't gone anywhere since Thursday last week. So just the one position on. Second entry on this should be triggering. It'll be about 80 pips away. Yeah, that would have been a close to an entry there. So if we can get another push above yesterday's high today, and we get a nice tight M5 reversal, I'll take a second entry up there, or the EA will take a second entry up there. Obviously, target. I've got my target down here on the euro yen, which is going to be roughly 300 ADR. Just in case, if it comes, it comes. I'll take it. If it hasn't come and we're just doing this, I'll take it off down there ahead of that high. This propulsion gap's here, target. Euro New Zealand. Again, same sort of thing, stuck in this short. That was the first entry there, one drawdown control. Second entry there, one drawdown control. Third entry, I took a fourth entry there, which I exited today. So straight in, straight out today. That's paid for the 2 drawdown controls we've done. So break even on this position at the minute. Pound CAD, ADR. So yeah, again, Euro New Zealand, about 150 ADR. For break even in that propulsion gap. Quite surprised we haven't had a continuation rally on this New Zealand dollar. This euro's got nothing either. So this is only going up because the New Zealand dollar and the Aussie dollar have been dropping off of the CPI figures from Australia. That was pound CAD, wasn't it? Let's have a quick look at that ADR. There you go. So this pound's rallying at the minute. So nice rally on the pound. Pound yen. Again, another yen pair rallying at the minute. Doesn't matter what the pound does. Pound can be as strong as it likes. If the yen's going to power up, pound is not going to stand in its way. It's going to collapse with everything else. So targets are down here at the moment on this. I should really move these down. I'm just going to move them down a little bit into that propulsion gap. We've got this potential resistance here, which might act as that propulsion gap, which may act as a support. That's a 50% retracement, so that's a good target. Pound New Zealand, short, 2 positions. First drawdown control done literally just now on that one. Third entry will be going in above ADR today. Again, haven't profit taked on that move at all. Market's obviously liking the pound news today. Pound US dollar, I've got long at the moment. As I say, I took that one off this morning just in case we remained range bound, just to bank some money. It's been added back on again already, and looking to exit on that propulsion gap. If we can get a weak FOMC today, that would be lovely. Be beautiful. If they can drop the US dollar today, that's first of all going to rally the yen. Secondly, everything else is that I'm in pretty much is going to just play out. So really nice if we can get a weak US today, but that's break even that high. Looking for that propulsion gap as a target to the upside. Just need this US dollar to take its foot off the gas a little. You can see the pound across the board has been very strong. Yeah. So pound odd rallying nicely. Pound CAD rallying. Pound Swiss trying to rally. Very good. Difficult to rally against the Swiss franc, anything. Pound New Zealand rallying. Pound US dollar totally sideways. Just shows you that pound is very strong at the moment. Just shows you how strong that US dollar is. It's holding it down, which means it's as strong as the pound. If FOMC comes out as negative, that's suddenly going to pop. So we'll wait and see. Pound New Zealand ADR. So Pound New Zealand just hit ADR as well as the pound odd. Oh, sorry, what was the other one? Pound CAD, wasn't it? And pound US dollar, I've gone through. New Zealand dollar Swiss also in at the moment. Single position on this at the moment, taken on, I think it was there, it was Monday. So yeah, Monday, that reverse, that was the H1M5 entry there. I was literally looking for a propulsion gap target, that low. Yeah, tested, broke it. Haven't retested it yet. We've got propulsion gap target there, propulsion gap target there. So just looking conservative, quick little long to get up to there, sideways for 3 days. Summer trading, it just drives you nuts. US dollar CAD, 2 shorts on this at the moment. Again, first entry on the entry there, H1M5 mean reversion entry. Can't see the RSI is extended behind my head. So that was the first entry there. We went sideways for 3 days. Then we had that big, strong push. Second entry taken. Since the second entry's taken, we've gone sideways for 5 days. We're just back up at those highs and breaking those highs now. So, you know, it's taken a week. This is, I mean, all these positions I'm in at the moment, they're all 2s and 3s. Normally, these would be playing out within days. Some of these have been in for over 2 weeks now. And the movement is just so slow. It's like trading in slow motion at the minute. Yeah. Been in this now for well over a week and only managed to get 2 positions on. Just shows you how weak this thing is at the minute. So 2 RSI extensions haven't gone anywhere. So we've moved literally 1.5 ADR from the initial position. We're now roughly 2 ADR away from where we took that position 2 weeks ago. So we've moved 2 average daily range movements in pretty much 2 weeks. You can't do anything with it. You just got to sit and wait and stew. US dollar yen, we've looked at to death. 2 shorts on this, looking for a drop. Stupid target. The other thing about yen intervention, which is important to understand, is when it happens. So if we go back to September, yeah, so that one there was 9 a.m. UK. That's the London Open. Yeah. That one there was 3 p.m. UK, which is half an hour after the US Open. Yeah. So these intervention moves do not come during Asia. They come during London and US trading sessions most of the time. That one there, midday. Yeah. UK lunch. Yeah. So you'll typically see it happen while you're awake, obviously, if you're in the US or in the UK. Well, if you're in the US, obviously you won't, because it'll be like early morning. But it doesn't happen during Asia. So they specifically make sure that everybody sees it happen. It's not done during quiet times. So if you're going to get it and you're going to catch it, you need your TPs at ridiculous levels, right? So pound CAD weekly range. So that's the first one of the week, pound CAD. So that's our first weekly range this week. Oops. So there's Monday. Yep. So that move there is 248 pips. Weekly range is 242. So we've done our entire week's range in 3 days. So it's going to start to run out of steam now, and potentially have a little rest. If we can get, so that's basically 100% of the ADR. So that's going to be AWR, sorry. So that's around 150 of its weekly range. If we can get 150 of its weekly range, that'd be a beautiful short if it gets there today or tomorrow. Unlikely it'll get there today. It's 200 ADR, but so yeah, on these yens, if you're going to set these TPs, obviously put them a decent distance away, because you won't know about it until all of a sudden you'll go. If you've got the ADR dash or the RSI dash, you'll suddenly hear the dashboard go nuts. Everything will go ping, 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 and it will have happened. So if you put your TPs here, you're going to get triggered here. If you put your TPs here, you're going to get TP'd here. If you put your TPs down here, there's a chance if they do an intervention, you're going to get TP'd down there. But if this thing just grinds like this, yeah, I will just close them manually anyway when they're in profit. So you're better off having your TPs miles away. And if they do get hit while you're not paying attention, fantastic. Yeah. So just keep them a little further away on these yens. Yeah, US dollar, that's the last one. So that's what I'm in at the moment. This has been just fluctuating between sort of 1.5% and 3.5%, or 1% and 3.5% for the last week or two. So nothing in drawdown that I'm worried about in the slightest. Euro New Zealand is the most stretched thing in Aussie US at the moment, at 0.6 and 0.7%. Just can't get any traction. We will see what happens tonight with FOMC. Have you got a video about hedging? No. I don't do hedging. So not really something I get involved in. From the ORB perspective, this version of the EA is testing a hedging strategy at the minute. But there's no video on it, really. Hedging is very, very, very difficult. So the concept, if you're talking about single currency hedging, which is probably what you're referring to, it's basically just getting into a position. Say you go short and it does that. You go long when you're wrong. And at some point, you've got to get out of that long. And then whatever profit you make on that, when it pulls back, you close that short for less than you make on the long. And that is your hedge profit. Yeah. The problem with hedging, which is the most difficult part of it, and the only difficult part of it really, is when do you get out of your hedge? Because you're always going to have a wrong trade. So that's the difficulty. With the ORB strategy, here's a good example. Yesterday's hedge was terrible, look. So we went long at the start there. It flipped short. We entered short. We got out of our shorts with a lovely big profit. Yeah. And then it pushed back up. That is where, if I'd have been around, and I wasn't, because I was out in the New Forest walking yesterday, that is where I would have got out, because the profit made here, if you look at that amount of movement from there down to there, that's the profit on the short. The loss on the long would have been that. Yeah. So that is smaller than that, which makes that a winning position. But you don't know when to get out of the one that's in winning, and you never know really when to get out of the one that is pulling back, that you need to exit. So it's a very difficult strategy to execute. There's mathematical formulas you can use, which I'm building into this version of the EA to test different permutations of them. But this one here, for example, that was about 5k loss. That was about a 2k win. So this was a negative 3k yesterday. Nothing you can do. You could have got out there with a plus 2k and a minus 1500 and walked away with $500 plus, if you'd have known where that was going to turn. But price action can show you that. Look at that massive wick. That should have been an alarm bell to go, I need to close this. But then where do you close this long? When we suddenly pushed all the way down to here and then we started to wick up, that looks bearish to me. So I would have thought you should carry on short with that short. Yeah. So it's a very difficult thing to do, hedging. It looks easy on paper. Mathematically, it looks easy and it looks like a good strategy. And the testing that I've done so far looks fantastic. But it's going to be a pain in the butt when you get hedged multiple times a week. So like today, for example, absolutely flew, absolutely flew, absolutely flew, absolutely flew. Absolutely no way you could not have made money on that today. DAX this morning, absolutely flew. Absolutely no way you could not make money on that this morning. NASDAQ, doing well at the moment. Yeah, so today, if I'd have taken these pre-markets today, that would have been a 5k win. That would have been a 5k win. That was a 2k win this morning. Actually, no, that's not true. That would have been a 2k. Actually, no, because that's off that range, isn't it? So yeah, that probably would have been something like a 3K. That would have been something like a 3K. This one, I just basically now would have shut it out and I'd be gone because I can't be asked. It's not doing anything. So just shut it and take that $400. Yeah, make the decision. You know, but these days, absolutely perfect. It's the days where it whipsaws on every single open. Those are the days you've got to think and concentrate on 3 different hedges at the same time. You've got to look at 3 different levels, 3 different lots of price action. It becomes much more complex. Imagine trying to do that on Forex. And that's the next thing I'm going to do is I'm going to test this on FX as a hedging strategy to use across multiple pairs. I've got some ideas based on Brian's stuff, if Brian's still here, on his Euro US dollar strategy, which was straddling the first 4 hours of the Asian Open. Pound odd ADR. Pound is on the move, massively moving. So the Euro US dollar, first 4 hours of the day, taking a break of that first 4 hour range. Yeah, today would have been literally straight up win, happy days. But you get whipsaws like that one. Yeah, triggered short and triggered long. So what do? You ride the long, yeah, and wait for the pullback on the short and exit the short. Happy days. That one was a break short, triggered long, hedged, absolutely collapsed, made a fortune on that one, pulled back, could have got out of that hedge. Happy days. Yeah. Might want to test this, Brian, as well. You can do this with the opening range breakout EA. Just set a 1,000% as your stop, and you can test this. But the days where you get hedged, what we're looking to do is minimize the loss rather than get rid of it. Yeah. So take a smaller loss or lock in a loss. The days which are winners are utter monsters. Yeah, if this breaks out of that 4 hour range and hits ADR, you are 10R. The days it whipsaws you, you are locking in 1R of loss. And you may be able to get out of it with also a profit. But worst case scenario, you're locking in 1R. You're not taking a loss. Oh crap, there goes the last 3 days profit. You're just locking in a loss of 1R. Yeah. So if it breaks, happy days, we make a fortune. If it doesn't break, never mind. We'll think about tomorrow. Yeah, we're going to lock in 1R as a loss. Just take 1R. But they got to hold the big days. That's the thing. Yeah. Or you need to hedge out of them. So ADR again, let's say, for example, we get the big run and let's say that's an ADR hit to the upside. We get out of our long at ADR. If it drops by whatever that range is away from ADR, that's a break even for the day. Walk away with no loss. Yeah, it's all about eliminating the losses, not making the winners bigger. It's about eliminating loss. If you've got any system or strategy where the P&L goes like that, yeah, looks like a pretty good system. Imagine if you could eliminate that. What happens? The P&L goes like that. Yeah, so system and strategy development should be about reducing this, not trying to make this bigger. Everybody tries to make more profit out of their strategies. That's the wrong way to look at it. Look at how to filter out the losses, and all of a sudden the profit will look after itself. It's they'll save a penny, make a pound. No, what is it? Look after the pennies, the pounds will look after themselves. Yeah. So that, I think, is a possibility for development on that hedging strategy. And if you can trade multiple majors, yeah, along with the US, so you want to diversify your hedges across Euro, US, Pound, Yen, Swiss. I probably wouldn't do it with the Aussie and New Zealand because they don't tend to move as much, but you get those 5 pairs. And if you just trade 5 pairs on the hourly chart using those ranges and hedge all of them, you'll find that probably 2 of them, maybe 3 of them a day will go and 2 of them will hedge. Those ones that go are bigger than the ones that hedge. You're done, aren't you? You're done for the day. You just wait for that P&L to get to a level where you can just shut the lot and walk away. It will happen. So I've just got to build another model to test that. But anyway, it's just another breakout strategy. Sorry to annoy you with this again, Lee, but just to quadruple check, I am running H1M5. Do my charts need to be displaying M5 for the EA to open trades? Yes. So here's my VPS, right? Let me show you my VPS. So with there are ways and means you can get EAs to run on any time frame, basically, and you can force them to trade a 5-minute chart even when the EA is placed on the hourly charts. The problem with that is MQL5 has rules and regulations about EAs that you upload onto MQL5, right? One of them is that you cannot upload an EA that is based on time movement, right? It is, you can't upload something that only works on the 5-minute chart, right? So it will go through tests. It will test it on the 5-minute, the hourly, the daily, the 4-hourly. And obviously, if you've got something that only trades on the 5-minute chart, it tends to fail. So it wants you to upload EAs that work across all instruments and all timeframes. So there are some EAs out there that get around this in various different ways, but I don't think it's the right thing to do. So what you do is you put it on the time frame that you are trading. Okay, so for example, when my VPS loads, this is the H4 M5 mean reversion strategy. So H4 RSI, and we are entering on M5. Now you could make this the M15, H4 M15. This is what's taught in the bootcamp, H4 M15. This is actually running H4 M5. There's very little difference apart from the reversal alert trigger time frame. Yeah. So all the charts here you can see are running on the 5-minute time frame. Yeah. Because I am using 5-minute reversal alerts. Yeah. But what this EA is doing is it's monitoring the H4 RSI. Hello. It's monitoring the H4 RSI. So your higher time frame RSI filter is true, monitoring the 4-hour 14, 70, 30. So you can see up here, you got 4-hour RSI is currently sitting at 69.75. So it uses the M5 time frame, and basically what it's doing is saying, is this above 70? Yes. Well, it's not at the moment, but if it is yes, then when you get a reversal alert on the 5-minute time frame, take a trade, and vice versa for longs. Yeah. So you've got to run it on the time frame that the reversal alert is on. H1 hedging set file, which is this one here. Everything on this one is running on the H1 time frame. Yeah. So these are all hourly charts because we are trading H1 reversal alerts. So this is the reversal alert EA. Yeah. It enters the market when you get a reverse alert on the time frame that the chart is displaying. So you have to be on that time frame. Yeah. There you go. Clear as clear. Durej, during which trading sessions do we get more reversals in relative terms? Asia, London, or New York? There's no time the market's not moving up and down, is there? It's impossible to answer the question. What instrument are you trading? What time frame are you trading? Is there news? Isn't there news? Is it a big bull day where ADRs are going off all over the place, or is it a really quiet day where everything's going sideways? Think about the question. How can I possibly answer where you get more reverse alerts? You get reverse alerts when the market reverses. What's the market got to do to reverse, move? I don't know. It depends on the time frame you're trading as well. If you're trading the 4-hour time frame, you might not get one all day on any pair. Yeah. If something's pushing all day, You're not going to get one down candle, let alone a reversal on the 4-hour chart, are you? All relative. Pound New Zealand, next level of resistance. We haven't got one. We're out in the highs on the Pound New Zealand. So this wick here, you can see, you probably can't even see it. That is February 2020. So that's COVID. There is none. That was your last daily resistance. Forget resistance. There isn't any now. This will turn when they are ready to turn it. So you're out at all-time highs. When they're tired enough, stick a fib on. Yep. So when they're tired enough, they'll pull it back to 38.50 or 61.8, 71.9, and they'll bounce from there somewhere probably, or out of these propulsion gaps. But it will be basically when they've pushed it hard enough and there's no one else willing to sell to them, they will go, screw it, we'll have to get out. And it will just pull back. Same as, it will just pull back when it's ready. But there's nothing to, there's no limit orders. The reason the market bounces at support resistance levels like this, the reason the market bounced here, 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 and here is because we rallied into that area and the sellers took control and made a new low. The next time we hit there, the sellers that started that move placed limit orders at that level, which all triggered and drive the market back down again. Then we pushed back up. The limit orders triggered again. We pushed down, pushed up, limit orders triggered, limit orders triggered, limit orders triggered, but didn't get any momentum because there was more buyers this time than there were limit triggers from the sellers. We battled it out and then the buyers took control. Then we pushed down and the buyers' limits triggered. Yeah, it's all to do with limit order triggers at support and resistance. That's why market structure exists. When you push out of a market high, let's say that's your high, you push out of the market high, the people that made this break happen, if they want to maintain it, they have to defend this area. So they place orders at that level to make sure that when the sellers come back to that level, they get pushed back away. They try again, they get pushed back away. Eventually, those sellers will go, we can't get through this level. They want to go higher. They will get out of their orders and become buyers and trigger back up. How the market works. This is why market structure tends to use previous support resistance areas as bounce points. Because that's how markets work. It's a battle between the buyers and sellers. What you see on your chart with the propulsion indicator is the orders. Look, accumulation, big order, propulsion gap, test, buyers add, test, buyers add, test, buyers add, test, buyers add, test, buyers add. Buyers accumulated, broke to the upside, defended that buy and rallied away. Why? Because they need to make profit. If you've bought it, you want the market to go up. If you've got enough money to make the market go up, you're going to make the market go up. This is why propulsion gaps are used on the chart, because we know that the market's going to come and retest them. Just how it works. So in Pound New Zealand's example here, we went into an accumulation or an area of balance where the market is happy to trade. We started to contract. So this is the buyers adding more, adding more, adding more, adding more, adding more, adding more. The sellers not being able to defend the level, finally breaking. Symmetrical triangle break at the highs. So this area here, we've already tested it, look. So if you want a TP on the way down, this accumulation is probably where you're going to find a continuation bounce from, if there's still enough buyers left in the market when we get back there. Which we won't know until we get back there. I'm just trying to find another example. So push, push, tempted to break through, finally got through, tested, 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 tested. Wasn't quite enough on that rally. Came back up to it, couldn't get through it again because the sellers are in control. Tried again, still couldn't get through. Take a bigger run up, finally broke it, retested that level. That high, tested, support, 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 adding, adding, adding. So that break that they made there, they're adding to those positions and driving the market the direction they've bought it. It's all a battle between buyers and sellers, and this is why I keep saying you can't tell where the market's going. There's no one on the planet. If we see this break here, when it gets back down to here, there's no one on the planet that can tell you if that's going to bounce or not. It's a previous resistance tested there. Look, tested once, rejected, broken through, tested twice, pushed away from. No one can tell you what's going to happen here, because when we get there, there is going to be a different amount of buyers and sellers in the market to what there was there. So if the buyers that have made this move are out of their positions, there's no reason that they were going to defend that area. Some of them will try. There will be limit orders there, and you'll probably get a price move away from it. But if there's more sellers when we get back to this zone than there was the last time we were there, it's going to break. This is why you can never, support and resistance only works a certain amount of the time. Breakouts fail a certain amount of the time because there's just not enough buyers to do the breakout. Yeah, and you get to a resistance level and it bounces off because there's not enough buyers to break through, and vice versa. So it's all to do with supply and demand at these areas. However, all these supply and demand indicators out there that paint in these rectangles at these levels now instead of lines, same thing, they're as useless as anything, because when you get there, the odds are either that or that. It's still 50% when you get there, because you've no idea how many buyers and sellers are in the banks at each of those levels. So it doesn't matter, does it? When you get there, there's a 50-50 shot of it working or not. So no indicator on the planet is going to help you. But you need to know, if you are short here, for example, off of an ADR today, where's this going to the downside? Well, we know that that is a strong reaction point. So if you're going to put a TP in it, where do you put it? There. Why? Because it's above a propulsion gap. What happens at propulsion gaps? They buy again, because that's where they started to buy. And if they are enough buyers in the market and they want to continue long, it's not going to get through that level, is it? It's a battle line. It's trench. It's just buyers and sellers. Everyone that's buying, there's another seller on the other side. Anyway, so that answers your question, Michael, on the pound New Zealand. Long and short of it, I haven't got a clue. Sorry, I can't be any more help, but there is no resistance. So it's a case of what you should be asking yourself is, when we come down, where are we going? If you're short like I am, I'm going to look at that level, because that's the last level they bought like crazy. However, this level here, they bought like crazy too. So unfortunately, that level there is above my average. So I can't use that one. So I'm going down here, because that is useless to me, that level. If that bounces off that level, it doesn't help me, because my average is here. I need it to be below my average. So if we don't make it through that level and it bounces up higher, I will add again and move my average up. And then I'll use another level that I think they're going to come down to. Wait and see what happens next. Wait and see. I think that's a bit that everybody gets their head around. They struggle to get their head around with position trading, is the wait and see element. The fact of accepting you've got no clue where this is going. You can't predict it. I can't predict it. I can have an idea based on what I've seen in the past. And over the last decade, I've watched this thing do the same thing over and over again. So I've got an idea where it might be going. I couldn't tell you when, and I can't tell you if it's definitely going to go there. But what I can do, and what everybody can do, is plan a trade so that when a move starts in the direction you want, you know roughly where it's going to get to. So if you can get your price above that area, that's what it's all about, isn't it? Making money. So we just got to get our price above the area where we think price might go to next. And there's many, many, many places that it could go. So, Guru, the EA you're using is called a market reversal alerts EA. Yeah. Can you say the version name? So it's the market reversal alert. So it's this one here. It's the market reversal alert. So it's this one here. So it's the market reversal alert. So it's this one here. So it's the market reversal alert. So it's this one here. So it's the market reversal alert. So it's this one here. So it's the market reversal alert. So it's this one here. So it's the market reversal alert. So it's this one here. So it's the market reversal alert. So it's this one here. So it's the market reversal alert. So it's this one here. So it's the market reversal alert. So it's this one here. So it's the market reversal alert. So it's this one here. So it's the market reversal alert. So it's this one here. So it's the market reversal alert. So it's this one here. So it's the market reversal alert. So it's this one here. So it's the market reversal alert. So it's this one here. So it's the market reversal alert. So it's this one here. So it's the market reversal alert. So it's this one here. So it's the market reversal alert. So it's this one here. So it's the market reversal alert. So it's this one here. So it's the market reversal alert. So it's this one here. So it's the market reversal alert. So it's this one here. So it's the market reversal There's a link. If the strategies are all explained on here, they're all explained in the bootcamp. The set files in the Telegram group. So if you want to go to the Telegram group, the set files here as well. So there's a link to the Telegram group there. There's set files here. But it's a sort of a Swiss Army knife EA. You really need to understand what you're doing with it. So if you just use the set files that I'm using, you'll be getting into the same thing as I'm getting into. Yeah. So what you're seeing on my P&L, you will have pretty much, depending on your broker. ORB hedging. Could there be possibility for drawdown control, getting a hedge trade to break even? Yeah. So the other. Again, this is something as well I'm going to be testing. So let's look at the NASDAQ yesterday, for example. So when you get out of the shorts, wherever you get out of your shorts, what you can do here as well is close, because I take two positions. I take one, you can see I have two TPs. Yeah. Oh, there they are there. So there's one TP, there's the second TP. We're trading here at the moment. So that is TP1, which is 2R. TP2 is 5R. So I take two trades, get out of one there, break even the position, and then try and get a runner for the second. So when you get into two positions short and you get both of those positions short off, you can close one of those longs, which reduces, if this does run away, it reduces the amount of drawdown on that hedge. When you get them back up to here, obviously you can take that second position off, but that's not as profitable as leaving the whole thing on. So this is something I've got to test. So you could reduce the size of that down by half, a third, or something when you take profit on this position. And obviously then that pushes back up and you get out of whatever you need to get out of. But it reduces the profitability. I don't know whether that's the right or wrong thing to do. Again, it's something I've got on my... I've got a big to-do list to do on this one. But that is on my to-do list to be tested as well. Drawdown control. But the hedges are always closed end of day. Yeah, I never hold overnight on indices. You can see why on the DAX. Yeah, prime example of the DAX. Can't see it, but that's where we closed on the DAX. That's where we opened. Yeah. Look at the movement on the day and then look at the gap. You don't want to be stuck in that and then that thing drop twice as far as that gap was. That's 10% loss on your account plus. So don't hold overnight. Always close end of session. But yeah, there's lots of variations that I'm looking at. Yeah, I mean, look here. So this one, if this had triggered a short on the DAX today and the longs I got out of here, although they would have been held a little bit longer. But the shorts, obviously you could have got out and it would have closed at end of session. It would have closed those shorts there. So overall, it probably would have been a break-even session. Not bad, is it? Rather have a break-even than a loss. There's a million ways to handle it. And you can do all this manually as well. Again, you'll be watching these trades. You won't be letting all these trades run riot. You'll be watching these trades. So yeah, as I do with the ORBs, I don't just let the thing go. I monitor it. Do you know of an MT4 indicator that marks Asia, London, and New York sessions on the charts? Yes. Called Google. There's loads of them. How have you not found that so far, Mumo? MT4 session indicator. There's one by FXXSI. Indicator sessions, Forex trading sessions, indicator for MT4 on Forex Factory. There's millions of them. Google. I recall one of your videos that explains the MREA hedging set file in detail. It's on the strategies page. Hedging. That is in the position trading bootcamp day 5. Strategies. Yeah. So this explains the hedging strategy, or a variation of the hedging strategy. Here somewhere. It's in here somewhere. In there somewhere. Don't know. Have to go and watch it. Peter, M4, H4, M4, M5, H4, M5, you mean? You run on the VPS. Is that far from Telegram? Why can I hear noise? Oh, it's because that's playing. Is there a slight modification shown? I don't know. The H4 M5, I think, is the normal. That one. I think this is the normal one. Yeah, this is running 0.25% risk. Half an ADR. H4 14. Scaling in at half an ADR. 0.5% profit. 0.75 third drawdown control. Yeah, so this is the one that's just, this is the normal one that is in the on the website. But don't get caught up in what I'm using, right? What I'm using here is a set file. If you change settings on this, it still works. It just will work differently. Still works. Yeah, this is position trading. So whether you're using this exact set file, whether you set that to 0.1 or 0.25% as your initial entry, is going to change the amount of drawdown you go into and the amount of profit you make. That is it. That is your risk setting. If you change the RSI to use a 21 instead of a 14, that's going to change the sensitivity of the RSI. You're going to get into less trades if you use a 21 than you will if you use a 14. If you do drawdown control faster, i.e. at 0.5 instead of 0.75, or you do it as 1.5 instead of 0.75, that's going to adjust how quickly you do drawdown control. The market is still going to do this at random. Yeah. The settings you use in here are going to give you a different P&L to my P&L or the P&L used on this account, but it's going to give you a positive P&L. Yeah. Because you are going to be doing drawdown needed if needed. The EA's job is purely to get you into your trades as you want to. There isn't a right or wrong way of scaling into a position. Whether you scale in at half an ADR, 3/4 of an ADR, 1 ADR is different. It's not right, it's not wrong, it's just different. I'm using 0.75 because that's what I like. Other people are using 0.5 because they're more aggressive than I am. Other people are using 1 because they're more conservative than I am. They're all absolutely spot on, perfect, right. None of them are wrong. They're just different. If you get out with a 0.25% profit and I get out with a 0.5% profit, we're both getting out with a profit. That's it. There's no right or wrong. There isn't a set file. Everybody's, again, with EAs, everyone's looking for the holy grail set file. There isn't one. It just gets you into positions. I have no clue whether it's going up or down. Neither do you. This gets you into trades. So don't worry about whether you're using the right or the wrong version of the set file. What I would say, though, is backtest some different settings. And the main settings you always want to worry about backtesting are your risk. I mean, your risk is just going to affect the money that is banked or lost. Yeah. So that doesn't affect the strategy performance in any way, shape, or form. That affects the amount of money you make. The only things you can really test are the RSI level. You could test different RSI levels. Yeah. And you can test different scale-ins. So scaling in, on scroll, Scaling in half an ADR between positions. So test 0.75 and 1 and half and see what the difference is. See how long it takes to get in and out of those trades. And also drawdown control. So test those and also test different drawdown controls. So let the EA get you out when it's 3/4 into ADR and test if it was 1.5. What's the difference? Oh, I like it that way. That's much more comfortable for me. Or no, that's way too long. I'd be driving myself nuts if I did that. That's what's going to happen to you, not me. Everybody's going to have a different comfort level they want to start scaling out of wrong positions for, and also amount. I scale out of a third because I've got confidence in the market coming back because I've seen it do it for 10 years. If you haven't got confidence in the market coming back, you might want to scale out a half your position because you want less drawdown in your account. You will have higher loss when you do have pushes against you, but you'll also have lower drawdown. What are you comfortable with? I don't know. Everybody's different. This is why there's so many settings in this, because you can configure it to you. And if you don't know what you are, just use one of the set files and trade. And then go, Christ, this is always sitting in X% of drawdown. I don't like that much drawdown. So you can now know that you can scale out of it faster. Or I'm happy with that drawdown. I'm not making enough profit. Move your targets further away. Or make your drawdown control further away. Or if you want to, increase your lot size multiplier. Yeah. Get more aggressive. I don't know. Everybody's different. This is purely getting you into positions. That's why it's called position trading. Yeah. We don't know which of these trades is going to play out and when. Pound yen, got an RSI alert on as well now on the pound. Pound is super strong today. Just scaled out of a pound yen. There you go. So there's 3/4 of an ADR, 1.5 ADR. That's my. This is going too far. I want to get out of a bit more of it. Yeah, you might be like, holy crap, it's got out. I need more. I need out of some there. Holy crap, I need out of some there. I don't know. Everybody's different. But you know, I don't know when this is going to work out. But FOMC this evening, that could be sitting in plus 2.5%. Just get into positions with very, very, very small risk and let the thing play out and let yourself be traded. Let the EA just trade for you and just watch this and manage this, and you'll get a feeling for how it works. That's all you can do. But as I say, there's no right or wrong. The set files I'm using are all in the Telegram group. These ones that are running on the VPS at the moment. I'm leaving these fully unattended, which is why they're, you know, some of these are in, that's in 1.8% of drawdown, which isn't the end of the world. But at this point, I would be thinking I want to do an aggressive on it, but I'm not touching it. I'm just literally letting it trade away. It's still banking profit. It's still all doing absolutely fine. Yeah, it's all profit. But, you know, some of these I would be intervening with now. There's nothing wrong with this set file. It's just I'm not paying attention to these because I don't want to manage all these accounts. And neither should you. You should only be trading one strategy. So pick one. Honestly, don't worry about it. If you worry about the intricacies of a system, you get that analysis paralysis thing where you're like, no, that's wrong. No, that's wrong. Just accept the fact that you haven't got a clue what is right and just get into a trade. Honestly, it will liberate you. If you get into a trade, if you press the sell button with a 0.03 on something and go away for a week on holiday, worst case scenario, when you come back, you might be $50 in drawdown. You're not going to care. That's what you need to accomplish as a position trader. I pressed the button and I couldn't care less. If this thing shoots up 3 ADR, I'll deal with it later because I can't do anything about it. I could have taken a loss on my account and made a permanent loss and a thing and a problem I've got to deal with and chase, or just deal with it, knowing in full well that it's going to come down because it went up, because that's what it does. And that's what it's done for decades. And that's what it will continue to do. Every time it goes up, it comes down. Every time it goes down, it goes up. Every time it goes up and down and up and down and up and down, and then it has a wobble for a bit, and then it pushes up. What's coming next? When? No idea. Oh, wait. Does it matter what settings I've got in the EA. All I want to do is scale into a position at a decent distance. If it's half, 3/4, or 1, it's just different. You're going to have a different number of trades on to me. That's all. You're still short. You've still got to wait. Yeah, see, it just doesn't matter. Doesn't matter. Just don't get in too tight. Nothing under half an ADR distance between entries. That's the only thing I would say. Half an ADR is kind of the minimum. Guru, I've been using your ADR levels to scalp trading for a year, but this system looks peaceful. That's a good way to describe it. Peaceful, worry-free, stress-free, slow, I think is what you're looking for. Other than H1M5, do you run any other set files on a live account? No. Apart from the S&P strategy. So I run an S&P strategy, which is a long-only strategy in a bull market. So when we're in bull calm market conditions, which I think we are, I'm waiting to see what happens on this pullback. I think we're returning to bull calm now, which is this market state. This is what the market spends the vast majority of its time in. A bull calm market regime. Yeah, that's what it does most of the time. This is an anomaly caused by COVID and this ridiculous move out the back of COVID, which shouldn't have happened. But this is what we're reverting back to now. So in a bull calm market, I run a version of the set file, which is on the it's here. You have to fiddle about to get to it. Here, the S&P strategy on this blog post. So I run a version of the EA that basically buys the RSI dips. And again, there's multiple versions of this you can run, but it is a long-only strategy on the S&P 500. Updated December 2021. Good typing, Lee. But the set file's there. You can go and test this. But again, test it. It will blow the account because if you test it over the last year, it's going to blow the account because this is a bull calm only strategy. What have we not had for the last year? Bull calm. We've had bear volatile. So this strategy does not work here. It works here. So this is the only other strategy I run with the market reverse alerts EA on live. And this is kind of a pension fund strategy. So when we get a break below the 200, I'm out. I stop. When we break back above the 200, we're fine to go. So you can see in a bull calm, we don't ever get below the 200 in a bull calm look. We touch it every now and again, but it's usually a touch. So that's the only other one I run. But it's a long-term strategy. Right. FX SSI is the easiest. Oh, for the called sessions. Yeah, I've got a session indicator. I've got loads of session indicators. There's loads of them out there. Just Google, download them all. Always, whenever I'm looking for an indicator, I always look to see if there's a free one that does what I want. If there isn't, I build it. Basically, is what I do. So just Google, find them, open up 4 charts. If let's say you find 4 versions of session indicators, open up 4 charts, drag one onto each chart, look at it. Which one do you like the best? That one. Brilliant. Shut that. There's my session indicator. All you got to do. There's hundreds of free indicators out there. Most of them are total crap, or they're like session indicators, which just do something visual to show you something you need to know. Obviously, there's millions of signal indicators out there that promise to make you money, but none of them will. But things like session indicators, there's loads of freebies out there because they're just kind of utilities, if you like, aren't they? They're not doing anything clever or special. They're just telling you when the market. But again, you know, session indicators, take them with a pinch of salt because they're not accurate. There is no such thing as a session. When does the UK session start? When the market moves. When does the market move? When the banks press the button. When do the banks press the button? Certainly not at the same time every day. Go and have a look at the charts. Yeah. You look at a 15-minute chart, you stick a session indicator on here, it will draw a block when you tell it to draw a block. Whether the market moves when you've told it to draw a block or not, it's got nothing to do with the market, has it? If you say the session starts at 8:30 a.m. UK time and they move the market at 9:30, your session indicator is actually useless, isn't it? This is why I don't use a session indicator anymore. I used to, but I don't anymore because there is no such thing as a session in FX. It's a 24-hour market. Yeah, that move there happened at 9 a.m. on my broker. The move this day happened at 10 a.m. The move this day happened at 9 a.m. These are news events, by the way. That day, we moved at 9 a.m. That day, we didn't move until 9:45. Yeah, so somewhere between 9 and 10 on this chart is when typically the banks tend to move. But it's never the same time every day. Always a rough estimate. How long did it take you to put the boot camp together? About 2 weeks. Something like that. 2 weeks of recording it, editing it, planning it, writing, creating the slides. 2, maybe 3 weeks. I don't know. Not sure. Something like that. Originally, I sold it as a course for $99. Then I reduced it to $59. And then I thought, screw this, I'll just give it away for free. Because I just wanted to make some money out of my time, really. And like all courses, as soon as you release a course and somebody buys it, they copy it and put it up on the web for free. So what's the point in trying to sell a course? All these people that sell courses, I've got all their courses because they're all free. As soon as somebody's done it and you pay, that's a course released for £1,000. As soon as I bought that course and watched it and screen recorded it, everybody's got it for free, haven't they? What's the point in selling courses? I don't understand all these people that make money out of selling courses. I really don't get how they make money because I don't think there's any courses out there that are not available for free if you look hard enough. There's a million Telegram groups sharing courses. My bootcamp was up there within a week. And I thought, shall I fight it or shall I go, screw you guys, try selling this. It's free. Try selling something for $59 that I've given away for free. I had much more pleasure from doing that to the people that pirated than making any money out of it, which I made like a couple of grand. That was it. I'm not in it for the money. I don't need the money. I'm in it because I want to teach people how to trade. What's the approximate percentage annual return for the bull calm strategy? It's around, that's a tricky one. I've only been running it for 3 years. So I would say 15 to 20%. But the reason I'm hesitant is because I'm trading it with caution, because it's kind of my pension fund account. So I'm not taking high risk with it. If you look at, so basically this is why we have the 2472 MA. This is a bad example. Let's go back to normal market conditions before it all went screwy, right? This is why we have the 2472 moving averages. These are the monthly and quarterly moving averages, the monthly and quarterly reporting periods for banks and institutions. Yeah. Look at the bounces at the 2472. Yeah. It's not a coincidence. When you're in a bull calm market, that is what happens 90 to 95% of the time. Every now and again, you will dip to the 200. Every now and again, you will go into a bear market. 2008, COVID, the collapse that we've had over the last year because of COVID. There are certain things that happen in the world that cause the markets to collapse. So you need a trigger to stop. That was my trigger to stop, the 200 moving average. So if you were in the live rooms back in 2000, 22 in January, I said, we haven't had the Santa rally this year because we always get a Santa rally in December. We haven't had it. Something's not right. We collapsed down to here. And I said in the live room here, I'm turning off my pension fund because this doesn't look like this is going to bounce. This is wrong. This move was too fast, too sharp, too hard compared to pullbacks we normally get. Yeah. That was abnormal. So that's your get out. Lost money there. I lost money on that trade. I made a loss there. Every other trade here, I made a profit because I don't use a stop loss. So it's a scale in, scale out, scale in, scale out. So you could go very aggressive with this and you could easily double an account in a bull calm yearly market. This is what Warren Buffett does. Yeah. Warren Buffett uses a very similar strategy to Larry Connors, which is the 2 RSI bounce play on a daily. Yeah. If you go to an RSI and put a 2 RSI on this, this is one of Larry Connors' really, really old strategies. And it still works today. Yeah. You buy it here. And if it's still down here in a couple of days, you buy it again and then you wait and you get out. You buy it and you get out and you buy it and you get out and you buy it and you get out. And every time it gets down here, you just buy it because all it is doing, it's either going to bounce off the 24, it's going to bounce off the 72. That's what it does 99.9% of the time until it doesn't. Yeah. So bounce play here. Yeah. Scale in, out, no problem. That was a deep one. But I use a very, very small risk. If I used a big risk, I could really make a lot of money with it. But it's also what I want to retire on. So I'm not going nuts with it in the same way as you shouldn't with a pension fund. Your pension advisor will always say to you, are you risk averse or are you not risk averse? Well, I'm not risk averse. Okay, then we'll put it into risky stocks. You should expect a return of 5 to 7% a year. Are you risk averse? Yes, I am. Okay, then we'll put it into a big diversification across oils, metal, stocks, and FX. You're going to get somewhere between 2 to 3% return a year. If you stick it in here, you're going to get 8% return a year over a 5 to 10 year average, which is what Warren Buffett does. Yeah. If you stick 20 billion into the S&P over 10 years, you're going to get 8% return a year. You've got 20 billion, 8% a year is enough to live on. I haven't got 20 billion. So I'm a little bit more aggressive than Warren Buffett, but I'm still only looking for a return of somewhere between 10 to 15% annually. You will not find a pension fund out there that does that. This is my pension fund. I can return more in this by putting money into this every month and trading it than a pension fund will ever give me. That's what it does. So it's just doing exactly the same. It's just an investment vehicle. And the stock market is designed to go up. So you will find on all stock markets, why can't I select that RSI? Is this 14 or 21? 14 because it's on daily. So you'll find this on all instruments. Yeah. In a normal market. Yeah, this is not a normal market, but yeah, NASDAQ. Yeah. So normal market. That's what it does. It goes up. Because if you think about what this is measuring, this is an index of stocks. The top 100 in this case performing tech stocks in the US. Are they going to lose money? No. So what's going to happen to their share price? Up. Always. As long as they are ahead of their game, being in the top 100, their shareholders will demand profitable returns every month to quarter, moving averages. Yeah. As long as these companies perform as they do, this will go up. When they don't, the shareholders will kick out the board and replace it with a board that can make it go up. It will always go up. This will never stop going up. We were trading back in 2016 at 4,000. We're trading now at 15,000 in 2023. So not quite 10 years. In 10 years' time, you can go back and look at this video, we'll be trading at 25 to 30,000 because these companies are still going to continue to produce profit. If they fall out the NASDAQ, they will be replaced by an up-and-coming stock that's doing better than the one at 100, and they will become 100 because they're performing. So every time a stock drops out of an index, it gets replaced by a better performing one. How can it not continue to forever go up unless we have a catastrophic event where the entire market breaks, i.e. a bubble, the tech bubble, the housing bubble, the COVID bubble. We have bubbles. And every now and again, they break the market. This is the worst break in the market we've had since the crash of whenever in the 19 whatevers. Yeah, we haven't had a crash this bad. We've never had a pandemic. Yeah, and we've never had a market rally so strongly when every business in the world is losing money during lockdown. How can they possibly make money? They're not. Stock prices were artificially inflated, which meant they have to be artificially reduced. We've done that. Now we're back into normal. Yeah, so you've got to be on top of what this thing does to make money out of it. But if this is the first since the drop, we had a rally, broke a high, put in a new low, and again, market structure, we put in a market structure high. That was the first time I looked at it and thought this could be on the way back up again. What we haven't had yet is a 24.72 bounce, and this is the first 24.72 bounce. So if this holds and we break back above that 72, which I'm 24, which I'm expecting it to, which is the monthly moving average, that's when I'm getting back in. And I suspect then we will challenge those highs and we'll be off. And for the next 2 years, we'll rally. Why? Because interest rates are going to start to come down. Inflation's coming down. We're going to normalize back at 2% inflation, which is a healthy economy, healthy GDP, healthy stock market. And we'll just carry on going like that until the next bubble comes. And then you'll know when the next bubble is coming because we'll suddenly be down below that 200 moving average and your alarm bell will go, holy crap. You'll stop. But you will have made so much money doing that. By the time that happens, which it happened to me here, you'll be like, all right, fine, I'll take that. I think it's 12K, something like that. I can't remember what it was. I probably said if you go back and look at the live room from in December. But I took a loss. But that was nowhere near what I'd made in the rally. Because that's what you do. And that's what happens. You've got to have a trigger. When you're using a no stop loss strategy. This is why we do aggressive drawdown control in position trading. Yeah, when you get to that point where you go, this is uncomfortable, you have to do something. Yeah, so and this is why EA backtesting for the market reverse alerts EA, people go, it blew the account, it doesn't work. No, you didn't intervene. Yeah, you're a trader. This thing is an automated thing that enters positions for you. If you're not watching these positions, stuff's going to go wrong because you're a trader. If you're not a trader and you're expecting it to make you money and sit on a beach, go and work at McDonald's because this is not the job for you. You've got to watch this market. So you have to have a trigger which gets you out. And in this particular strategy's case, it's the 200 moving average. I don't know actually if that set file has the filter for the 200 MA. I don't think it does. Not sure, but there's millions of variations on it as well. So you can test variations until the cows come home. I'm getting out of this NASDAQ. I'm just going to break even these positions. It's just not going anywhere today, so I'll take the couple of grand on this morning, accept the holy crap, I missed all of that, and just take a break even on this because not going to FOMC. We're not going anywhere. It's FOMC, so this will go on FOMC. But until then, I'm not going to. I'm not just going to sit in it on the chance of wiping out this morning's loss. Leave the goat. Got to watch those aircraft inventory trades. Those will destroy you. Oh, are they coming again soon, Brian? The aircraft inventory news events. Yep, they will hurt you badly. Those that don't know what we're talking about, there's certain prop firms out there that have news filters that you cannot trade over certain news events. And there's one, Fidelcrest, who have a news event that doesn't even exist, but you will lose your account if you trade during it. And it's something to do with aircraft inventories or ship inventories, not including aircraft, or I don't know. Prop firms will do anything in their power to take your money. There you go, break even. So just out of the DAX. Done. Not interested anymore in that one. Right, I'll leave it there. So I've got lots of exposure on. So US dollar, I am seriously short. Yen, I am seriously long. If we get negative movement on the US dollar, we will probably get yen rally today. So this 3.6% could well be sitting down there by the end of today. We'll see. I think what will probably happen, though, is we'll get something like that in FOMC today. A little bit of a whipsaw up and down, maybe an ADR. But I don't think we're going to get a mass movement today. If we can get a 125 ADR or something, then you've got opportunities to mean revert it, I think. But watch the news. So watch the Financial Juice feed as it comes out. They'll release all the important things about FOMC when it happens. And just gauge by the market what it's doing. If the market is dropping hard and we're 150 ADR and it's not pulling back, there's probably something in here that is really bad or really good. So just, we'll have a look at it. I'll post in Telegram actually after FOMC what my thoughts are on it. But I get the feeling we're going to get the usual nonsense of not sure and maybe not sort of thing. And we'll get that. And we'll be exactly where we started by close. That's typically what tends to happen on FOMC without an interest rate. So we'll see. Right, I'll leave it there. I'll be back on Friday morning at 7:50 as usual for the Frankfurt session and 2:20 in the afternoon for the New York session. There's not a lot else really to discuss today, so we've talked for hours anyway. Cool. So I'm off tomorrow, back on Friday. I will post in Telegram if anything exciting happens, obviously, and I'll analyze FOMC when it comes out later. But just trade what you see and just get out of stuff. Just keep banking stuff. Yeah, as this drops, these will go green. As these go green, just stick them over there because you're going to get drawdown control during these rangy times. So you've just got to just keep banking to stay ahead of the game at the moment, really, while we're waiting for this market to wake up a bit. I might try and go flat next week because I'm off on holiday for a week at the end of August. So I want to try and get as flat as I can. But I might leave the EA just running as it is and not touch it. I haven't decided yet. But if the market's going to be this flat, it doesn't really matter what I do. I'll just go on holiday and enjoy it. And I'll look at the charts every day and go, nah, shut it and go and sit in the pool. That's what you do. Assuming not everything isn't on fire, because it is in Europe at the moment. And that's where I'm going. So fingers crossed, it's not all on fire. Anyway, we will see. 39 degrees there, I think, yesterday. So anything you need, let me know. I'll be in Telegram. Other than that, I'll be back on Friday and have a good day. Hopefully FOMC is profitable and I'll see you guys then. Have a good one.